Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold in front of us. And we can see that gold is standing at 2027 right now. This is the current market price. On Saturday, we discussed in detail about the overall confusion on the chart of gold and the influence of the fundamental factors, especially the geopolitical tension. But right after the market opening, we could see that the influence of the news cannot be seen on the market right now. Maybe market is waiting for some more intense news. But as of now, we do not see any influence of the geopolitical factors. So as a result, we need to consider the present trend of the market and plan our trades accordingly. And before I proceed, I would like to mention that I am out of station. Okay, so as a result, I'm recording. Okay, in some other place, so there might be some disturbances. So please don't mind. Okay, I'll be back home tomorrow, and hopefully from day after tomorrow onwards, things will be normal again. Anyways, let's look at the chart right now. At first, DXY US dollar index, and we can see that right out of the market opening, DXY is still struggling. Okay. DXY is still struggling around the area here. DXY is unable to hit 104 level. And for a trend reversal, we need DXY above 104.50. And if we observe the structure of the market here, we can see that the structure of DXY is not very positive. DXY is forming lower highs, and sooner or later we may see DXY inside the range again. And as we have already discussed, if DXY enters inside the range, then things will not be very good for day traders because market will be low in volatility, and moreover market may remain sideways or choppy for the next couple of days again. So let's wait and watch. No, not a good picture from DXY. Now let's look at the chart of gold. So on the hourly chart, we can see that after this up move, sorry, not GBP, was the gold. Okay, gold showed a retracement. Okay, we could see gold showed a retracement, and right now gold is trying to go up again. So if you're a swing trader, okay, then I will say that wait for some more time because still we do not have any clarity regarding the trend of the market for the next couple of weeks or at least 10 to 15 days. Okay, because as a trader we can easily see that in just few days the trend of the market is changing. Okay, trend of the market is changing. If you look at the 4 hours chart, then obviously we can see that the market is in downtrend for quite some time. But is this a pure downtrend? The structure of the market is down, there is no doubt about it. But suppose you are having a sell position somewhere around here, and when the seller will see such an up move, okay, obviously his heart will not be in proper place. His heart will beat fast, isn't it? So we can see that overall there is a confusion. The structure is down on the H4, but the overall there is a confusion, and I think that it's better to wait for the right time, especially if you're a swing trader. And if you're a day trader, you just need to grab the opportunities, and you need to follow proper risk management and trade from level to level. That will be the safe thing to do. So as we have already discussed in our previous video, that the next high of gold will be very important. So right now we can see that to continue the upside, okay, to continue the upside, gold needs to cross 2040 now. Okay, then only we will be able to consider that okay, we are having a good up move market. So right now we can see gold is struggling around 2030 level. So as a result, day traders, you are in charge. Swing traders, you need to observe carefully. So let's discuss the trading opportunities. First of all, 2016. Okay, we have the next support around 2016. 2016, you can also say 2015. Okay, around this level we have the first support. Why? Because this was the level from where market bounced previously. And if we observe the structure of the market on H1 or hourly time frame, our present time frame, we can see market is forming lower lows and lower highs. But still, this is the level from where market is showing recovery. So as a day trader, I think that we need to observe the market around 2016, 2015. If the volatility is not very high, we can look for a buy around the area for 30 to 40 pips. Keep in mind, the structure of the market is not very positive, and overall there is a confusion scenario. We don't have any big news coming up also. So as a result, volatility of the market will be important, because no level is permanent in the market. Okay, no level is permanent in the market. No trader can predict the market 100% accurately. It is our capital, it is our responsibility to protect it, so do not trade blindly. Once the market will be coming down, observe the volatility around 201516. If you see that market is not forming big red candles, market is showing price rejection from below, you can go for a buy around this area. Okay, and the second support on the chart of gold you can see is around 2000 2009 or 2010, I'll say. Okay, 2010 to 2007. 2010 to 2017 is the next zone on the chart of gold, because we have FIBO 78.6% retracement level, and along with that we can also see market has taken support previously. So if we combine both the factors, under normal circumstances, at least we can expect a bounce of 50 to 70 pips around this area. Okay, because you can see previously all the FIBO levels have done a very good job, so we can expect the same. So this is the level where we can expect the market to provide some support. Okay, 2010 to 2007. And if you ask me, Vilas, which one is a better level, then I'll say 2010 2007 is a better level to go for a buy position as a day trader. And ultimately we have support around 2000 to 2002. I don't think so market will be heading towards this level. So let's focus on 2016 and 2010 as of now. And one thing I would like, actually I have a confession, and that is, see, I'm a day trader. Okay, I'm a day trader. I have been day trading for more than 10 years. So my forte is day trading. Okay, so so whenever I need to recommend or suggest swing positions, okay, maybe you will see that I'm not that good, because personally I am not a good swing trader, because most of the time I go for day trades or scalping only. So that is my forte. Okay, so that's why most of the time I uh, prefer to suggest trading options only. Hope you can get my point. And these are the two levels where you can look for buy. And if you see that market is going down with heavy selling pressure, you can also look for a sell below this area as well. 2016. Below 2016 you can look for a good sell as well, if you see the market is going down with heavy selling pressure. So volatility is very, very important. Keep in mind, price, okay, price is the king and volume is the queen, and size of the candle tells us about the volume. In stock market we have indicators, we have the volume bars, volume profile. But in forex market, okay, we don't have anything, because it's a decentralized market. And if market goes up from here, okay, then we can look for a sell position around 20. Okay, 2030 to 2034. And this seems to be the best selling opportunity, my dear friends. Sorry, not 2032. Actually, the problem is that there is so much disturbance right now. Okay, people are shouting, so I am pausing the video after every 10 to 15 seconds. My brain is not working. Sorry, man. Sorry. The first level is this 2034 to 2037. This is the first level where we can look for a sell position around this area, and this seems to be the best level to take a sell or to look for a sell. Before 2034, 2037, we can look for sell position around 030 and 2032. This is also a level where we can look for sell positions in the market. You can already see the market is standing at FIBO 50% retracement level, but just observe the size of the previous candle. Market is bullish, so as a result, taking a sell uh, here can be a little bit risky. If you already have taken a sell, I'll say that okay, wait for some time. But personally, if I need to trade, then I will be going for a sell around this area and around this area of the market. So let's wait and watch. And if market really needs to give us a clear picture, then gold will have to break this particular high, that is 2040. Then only we will be able to consider it as a continuation of the up move. So let's wait and watch. Thank you so much for bearing with all the uh, disturbances. Actually, I came here for my friend's marriage. And yesterday, because of the disturbances only, I could not upload a video. But I received a lot of emails and WhatsApp messages that please upload a video. That's why I thought that I should be uploading. And I can see that, okay, not uploading was a better decision. Okay. So I'm going home tomorrow in the morning and maybe I will not be able to upload, okay, because too much chaos. Okay. So thank you so much. Bye bye. Take care. All the best.